I'm Charlotte McLeod with investingnews.com, and here today with me is Rob McEwen, Chairman and Chief Owner at McEwen Mining. Thank you so much for being here. Good to have you.
Great to be here, Charlotte. Thank you.
Yes, good to be catching up with you. It's been a while since we did one of these in person, so that's always nice. And of course, we'll begin with gold. It's also been a little bit of time since we last spoke, and the gold prices has really been on the move, approaching the $3,000 level. And of course, people will remember that you have that 5,000 long-term target. So getting closer. I wanted to check in. That's still the long-term view.
Well, I have some friends that are suggesting it's going much higher than 5,000. But right now I'm happy with 5,000.
Yeah. I think that sounds, it sounds even more, it's increasingly, I think, attainable as we keep going. So for gold, I'll keep it broad at first. What's the most important driver that you're watching for gold right now?
Probably, well, a lot of the issues that drove it to where it is now. There's excess debt at, government levels, corporate levels, personal. The government keeps printing money and debasing currencies, and you look at the purchasing power, walk into a grocery store, go to a restaurant, everything's gone up in price. And I think the world is seeing fiat currency, paper currency, just not buying much. And they're saying, well, what do I buy to protect my purchasing power? And then, so other factors, you've got a number of central banks buying gold and getting rid of treasuries. The BRIC nations in particular. You had recently, and it was very interesting, the Chinese government said that insurance companies there could buy up to 1% of their assets in gold. First time. And there's been some estimates that could be an inflow if all of them did, which they probably won't, but $27 billion of buying. So you have those things. Then you have a delivery problem in London where normally it was 2-day settlement. You buy a bar of gold and you're going to get it in 2 days. Right now, it's running at 4 to 8 weeks. So you can think of all sorts of fails or failure to deliver on contracts, so defaulting on contracts. And I think that's setting off a bit of panic. We are hearing that maybe it's tariffs and people want to get gold from Europe into America without a tariff, but I don't put a lot of credence in that right now.
Yeah, that is certainly an interesting situation. I've been talking a lot about it with people and quite a wide variety of ideas about what's going on. But I think as you've laid out for gold, it's clear that there are these really strong underlying factors and then some more recent kind of newsier items that are going on. And
do you think maybe that people are concerned that rather than Canada becoming the 51st state, that the U.S. becomes the 11th province, and they're trying to get gold to protect?
That would be a different way of looking at it. I don't know. I feel more comfortable with that than becoming a 51st state. Maybe we should talk a little bit more about that whole situation. I'll bring up the tariffs, which you're talking about in relation to gold. So we've got today, now I can finally talk a little bit more concretely about what's going on with the tariffs, the Canada and Mexico tariffs, increased tariffs on China. What is going on here in your view? And we've seen retaliations. Are we going into a trade war?
We might. I mean, you produce gold, you can sell it anywhere in the world. It doesn't have to go to the U.S. So the tariffs for gold miners and a lot of metal miners aren't going to be material. It's more our manufactured goods going across the border that might experience that. I don't think Canada should have said, we're going to retaliate with tariffs. It's just going to make it more expensive for Canadians. I would think President Trump threw out the gauntlet, and I think it was really good because it's a wake-up call for Canada that we should be taking care of our border. We should stop the flow of drugs. We should be spending more on defense. And it might make our government more responsible to Canadians, too. So I think it might be hard on some industries, but I think it's good for the country.
Okay. And speaking of this being maybe a wake-up call for Canada, I think I worry about how it plays out a little bit because we've got our government in transition right now. So any further thoughts on that angle to all
this? They're responsible Trudeau and the Liberals to prorogue Parliament. I mean, they knew this tariff issue was coming up, and yet they say, we're going to shut down Parliament, we're not going to talk about it. And you go, those guys should be going to jail. And the Governor General should be thrown in jail with them that allowed this to happen. Yeah, I mean, doesn't there have to be national debate about this? How we're going to behave?
It's, it seems like we all kind of just accepted it, and that's what's going to happen.
No, they should be run out of the country.
Yeah, I think so. That's what's going on, U.S. and Canada. I wanted to ask your take on all of this in terms of, global relations between countries. It feels like the U.S. is trying to go more inward. Do you see other countries doing that as well? And I'm thinking about this, I guess, in relation to supply chains and things like that, which of course impacts the mining industry.
Well, China's been doing it for quite a while. They developed that Silk Road concept, and they've been well ahead of the Western nations in saying, look, we're looking at our economy. It's going to grow at this rate. We have to secure supplies of raw materials. We had here were saying, well, mining was bad. We don't want any more mines. And all of a sudden you have this geopolitical conflict and going, well, some of the sources of metals are no longer secure supply. So where do we go? And you're seeing the U.S. Signed an MOU, Memorandum of Understanding, with Argentina last year to develop critical minerals. And I think some countries are saying, we're going to close in. You see Saudi Arabia right now very aggressively embracing mining. And they're looking to get mineral resources there because they want to make that the third most important industry in their country. And I think others are waking up to the fact that they're natural resources that could supply but aren't ready to supply, and none of the politicians understand the timelines between a discovery to build a mine, well, to get a permit and then build a mine. So, yeah, there are nationalisms going on all over the place right now.
Yeah, okay. And we're talking about, this dislike of mining and the shortages that is going to create. I know that you often like to talk about bringing young people into the industry and new people, and I've been hearing more and more about that in terms of skills gaps in the industries. Is that something that you're seeing in your companies when you're looking for people?
Yes, turnover is fairly high. Like I think in Timmins is around 28%. So that's an expense because you have to bring people in, train them, and that. And there just doesn't seem to be the same stick-to-itiveness to a job. But also you had a precipitous drop in enrollment in schools of geology, mine engineering, and all sorts of other skills that are related to mining. So I think, can you create a mine that looks like a SpaceX factory? And you go in, it has white acrylic floors, it has stainless steel, it has everybody sub 35. And there's all sorts of large machinery around there that they're designing, building, and doing things that are exciting. I was on a yacht 3 weeks ago off the coast of the Bahamas, and the yacht was full of engineers from SpaceX, and we were watching the rocket get launched in Florida and land on a barge in the ocean off the Bahamas. And I think maybe you should get rid of the tie, wear a T-shirt, have jeans, look more like a tech person, and then try to make a comfortable setting. I just think too many people, if I was 20 years old, coming out of school, I went to a mine, say an old mine. It's probably a little dusty. It's not that clean. Most of the people there are probably 45 plus. A large number will be overweight. And I'm going, do I want to work here? No, I don't want to work here. So how do you make it more comfortable, attractive, sexy, that it engages them to want to do something? They should look at it and forget about all the superficial impressions and say, this is an industry, if you want to get to the C-suite, it's probably going to be one of the fastest industries to do it in if you're ambitious, because there's just a big shortage of people right now, and a lot of them are retiring.
Yeah, that's really interesting. It's kind of an image problem in multiple ways across the spectrum there. So yeah, let's see. Is that something that you would look to try at your own company, that kind of, switch an image, like a little bit more sleek and that kind of thing?
Well, yes. It's much easier to do when you have a brand new operation. So we've done that in our designs for Los Azules, our large copper mine in Argentina. And it's a dramatic shift from what a mine looked like. In Timmins, we have an old dusty mill and an old plant, and it's much harder to change something that's been operating for 20 or 30 years than to design brand new. But in Argentina, we're looking at a mine. It's a large copper mine. The accommodation the mine would be using less than a quarter of the water of a comparable-sized mine, emitting 1/10 the carbon. The accommodation take inspiration from the Incas. It's terrace, enclosed in a large translucent structure that stretches about 3 football fields long. It's got hanging gardens. It's growing its own produce. It's processing its own water. It doesn't look like anything in the mining industry that exists today. And it's just, how can you shock people into understanding that mining's changed, that our stewardship is much better of the environment, that there are wonderful examples of reclamation, and forget about those images that are 10, 20, 50, 100 years ago of the environment being degraded to a large degree. So we just have to show the world that we're acting better than they think we are.
I think that's very true, and I would love to see some designs for that. Yeah, I would love to see that. That sounds exciting.
On our website.
Yeah. Okay. So we'll talk a little bit more maybe about Los Azules and McEwen Copper, since we're on that note right now. I know you mentioned you've got a feasibility study coming up for that, and also the company's applied for it to be included in the large investment incentive regime. So I want to talk about that as well, about the benefits and what will happen if you, or I guess when will you know if you succeeded in the application?
Well, we're now 18 days since we applied. Supposedly, within 45 days, you'll get an answer. But if they have a question, the clock stops. And so you could be at the 21st day, and all of a sudden they have a question, and it might take 3 weeks to answer it, and then the clock starts again. And then they ask you another question. So the RIGI is a very important piece of legislation that was accepted at all levels of government, and it's to encourage large foreign investment. So for us, that would, based on our preliminary economic assessment, we would have a $2.9 billion net present value. The RIGI will add a third to that. It'll add over $900 million to that, so lifting us up to $3.8 billion. So serious. And you've had, right after it was introduced, you had BHP come in and cut a deal with McEwen Mining, which they valued at $4.5 billion for 2 properties. You had Rio come along and buy a lithium company for $6.7 billion. All of its lithium deposits largely in Argentina. They also have another project, Rincon, that's a couple of billion. And there are other companies, it's like there's a fence, and they're all leaning over the fence looking into Argentina and saying, is this real? If it's real, Argentina is a country with all sorts of mineral wealth. So, yeah, there's a lot of people driving towards Argentina right now and saying, this might be a very good place to be. There's 30-year tax stability. They're going to lift the foreign exchange controls. They're lifting the tax on dividends. You can arbitrate outside the country if you have a issue with the government.
Yeah, I know that you've become a big fan of Argentina as a mining jurisdiction, and I was going to ask you, what should other countries learn or take away from what they've done there to open up? And I think you've listed already a number of things that could be taken away.
Well, definitely reducing tax rates, increasing permit speeds. Canada right now is really suffering from an inordinately long period to permit a mine. I think we should put some AI in there and speed it up. Another country that's doing it, though, is Saudi Arabia, and I think they're even more progressive than Argentina. Saudi, before they put their legislation in, you could only own 49% of a company there. The Crown Prince has said we want to make mining the third most important industry there. I was there earlier this year. They had a big mining show. It only started 4 years ago. It had 7,000 registrants. This year it had 26,000. It's rivaling the PDAC.
Yeah.
And everybody there, it was so refreshing to see a government saying, we want to encourage mining. It was like getting a big bear hug. And you don't get that here. You don't get the government coming out overtly saying, mining is important, we want to support it. So there they'll say, we'll give you back some of your dollars on exploration. If you want to build a process plant, we have cheap financing, we have lots of money, and we're going to do this, and we're going to go fast. They're auctioning off land. And at the show, there are all sorts of people coming around and saying, do you want to be a partner? I don't really know about mining, but the Crown Prince wants it, and if he wants it, we want it. So we need expertise to go down there.
Interesting. So would you consider?
Oh, yeah.
Yeah, you would consider going there.
Well, 20 years ago when I was running Goldcorp, there was a firm here in Toronto, Watts Griffiths McEwen. It was a geological consulting firm. And their president, Jack McEwen, said, we've just completed a geological survey of Saudi Arabia. I think you should go down there and look at some of the prospects. So I sent some geologists down. You couldn't rent a helicopter. You couldn't use explosives. And we're not going to use them in the city, but, in the field. You could only own 49% of a company. And the Ministry of Mines, you'd be sitting outside their office for a couple hours waiting for a meeting that was supposed to start a couple of hours earlier. So they didn't show really any sign. They were used to putting a hole in the ground and the oil comes out and they got cash flow immediately. But now it was really something, and they've also reduced tax. So what should other countries do? Canada should wake up. When I went to I've been to the Middle East twice so far this year, in the last 6 months rather. And when I look at things that bother me about Canada right now, there's litter on the streets that wasn't there when I was a kid, and it was actually supposed to be a crime if you litter. You'd be fined. There wasn't a lot of graffiti. There wasn't, homelessness wasn't an issue. Car theft wasn't an issue. You go over there, there's no litter, there's no graffiti, there's no homelessness, there's no crime. And there are beautiful buildings popping out of the ground all over the place, huge construction boom. And I'm going, what's this based on? This is all based on natural resources. And I turn around and I think about Canada and think, we've got this massive country and we have all sorts of natural resources. Why are we denying Canadians the lifestyle they could have and the strength of our dollar? I mean, the actions of the government have dropped our dollar through the floor and made inflation just unbearable for most. So I'm thinking we got to get our act together because we're wasting so much opportunity.
Yeah, I think it's very painful for a lot of people, and it's quite telling to make that comparison between the two countries. So good to go into that. And just one more question on Los Azules. I know you're considering an IPO for McEwen Copper. Is that still to come?
Still
I know people are wondering. Yeah.
Yes, we want to get the feasibility done, so that's going to be done in Q2. The RIGI we want to include in it because it's such a significant boost in the value. And that's probably sometimes in the third quarter. So in the second half of this year, we should have an IPO out.
Okay.
And when we compare it to the deal that BHP did with Lundin, based on our last financing, we're valued at less than a quarter of that, but we are at a lower altitude. top end of Philo, which is one of those properties VHP bought, is almost base camp Everest. Now, when you go up that high in the mountains, you need oxygen. So do your machines. So lower altitude, we're a larger resource than the published resources of those two combined. We're a higher copper grade. We have gold, they have more gold, but we're building heap leach, so we won't be getting gold out. We're closer to infrastructure, major roads and power lines, and we're in the lowest cost curve, according to Goldman Sachs, and Jose Maria is in the highest. So being less than a quarter of the value, I think when we do the IPO, we've probably got a 50% bump, assuming we're in this type of marketplace.
Okay. So we'll keep an eye out for that for sure.
Have a big impact on McEwen Mining.
Yeah, I would imagine so. Yeah.
As the value's lifting.
Yeah. Okay, and on that note, we should take a look at what's going on in the rest of the company, although the copper side is of course important. So recently the company came out with 2025 guidance. Looks like 120,000 to 140,000 gold equivalent ounces. So pretty similar, I think, to 2024. But I know you've got plans beyond that to get bigger. So what would you want us to know about the rest of the business? I know that's huge, but
production in Timmins is going through a transition. We're going from one mine to another. So this year is going to be relatively flat in terms, as you said, compared to the previous. But as we move next year, there's a 8% metal stream on what we're currently mining that isn't going to be where we're moving to. So right now, 8% of our production is being sold at $600 an ounce. So we're going to make more money. We're not going to have to pay that stream. That was put on by previous owners. We are going to be mining at our mill rather than having to transport material. So that's $10 a ton savings. The ore is softer, so we'll be able to put more through the mill. So larger production, lower cost. And so in the next 2 years, that's a double. In the next 5 years, we're working on a plan where we can see a 5-fold increase in production from where we are today, up to 150,000 ounces. And we've been exploring quite aggressively there. Our resources in Timmins went up to over 2 million ounces and right around our mine, and then there's another million and plus near the town of Timmins. We're exploring we bought a company called Timberline in Nevada, which is close to our existing operations. So that exploration, we just put out a release today or yesterday, another one on Timmins week on Friday. So those are all going as expected, that the exploration in prolific areas is generating more ounces.
Okay, I think hopefully that gives us an idea of what's going on. And I don't want to keep you too long because there's lots to do out on.
Oh, we did one other thing.
Oh, yes.
We raised 110 million.
Yeah, so we have time.
On an instrument called a capped call convertible debenture. It's available to U.S. companies. We're a Colorado incorporated company, so it's available to us. It's not available in Canada, but most people look at a convertible debenture and they go, why'd you do a convertible debenture? You know, there's only a 30% premium. With the cap call, you're buying options that synthetically increases the conversion price or the premium paid from 30% to 100%. So our stock was around 860 US when we did this. And we effectively the conversion price was $17.30. So 100% premium over where we were. It's a lower interest rate, 5.25. It's just over 5-year term. We can call it in 3.5 years. We can use stock or cash. And if our stock tripled, we'd be only issuing 6% of our shares.
Let's hope. That would happen, yeah.
That's the solution. Because we think there's much more value there, and I didn't want to issue a lot of stock.
Okay, good. That was on my list. I wasn't sure if we had time, so I'm glad that you went into it. I'll let you go. Any final thoughts you would leave investors with? I think especially on the gold side, people are still thinking a lot right now about gold price doing so well and their gold stocks maybe not doing so well. Any thoughts on that angle?
Well, the majors, their treasuries are filling up. They're going to be looking for more resources. They're going to be looking down at the intermediates and the juniors. I think there's some really interesting drill results coming out of the juniors, and the market hasn't paid. It's starting to pay attention to some of them. And I think you'll see more people entering when they look and say, well, gold's been one of the best performing investment classes over the last 10 years. So maybe I should have some. And I recommend they should.
Okay. I think that's a very nice note to end on. So thank you so much for coming on to go over what's happening in gold and many other facets of the world right now.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Rob McEwen of McEwen Mining.